Welcome back. Well, as the integration of the Africa Continental Free Trade Area gathers steam, Standard Bank has released its Africa Trade Barometer, revealing that South Africa remains the top attractive country to trade within the continent. Joining me now to unpack the report in greater detail is Head of Trade at Standard Bank Business and Commercial Banking, Philip Myburgh. Thank you so much for your time, Philip. Now, when we talk about trade attractiveness, what do we actually look at here?
Zanati, it's a very comprehensive report, this barometer, and it's in its fourth edition. So I think it's important to understand how we do it. So what we do is we survey 2,200 odd businesses, slightly more, across 10 markets across East, West, and Southern Africa. Those markets represent 66% of Africa's GDP, 45% of its population, so it's fairly representative. And then we overlay that with macroeconomic data from the likes of World Bank, IMF, etc., and then we get further inputs from experts from ministries of trade all over the continent, etc., to also contribute to this report. And then ultimately we get to this very, very comprehensive report that reflects what African businesses on the ground are saying about trade. Now, what makes this quite interesting and certainly different from many of the other reports that one would have about trade on the continent and business in general is that 70% of this sample are small businesses, which is very unique because typically a lot of these reports and insights are dominated by what large multinationals are saying or what outside institutions are really saying. And now we're getting an on-the-ground view. And the fact that this is the fourth edition, of course, also gives us an ability now to start looking at trends covering themes like government support, infrastructure, and the like.
I know obviously Standard Bank, plays a very important role, being a significant component in terms of trade and facilitating trade in Africa. Is this, you talk about surveying about 22,000 odd businesses in 10 countries. Is this aligned also with Standard Bank's client base and really just the landscape that you operate under in Africa?
Certainly. The departure point is really that we believe we should and can do more to support the ambitions of the AfCFTA and driving more intra-Africa trade. And we do that on multiple fronts. There's the obvious ones in which we support financing of much needed infrastructure. We support cross-border payments and things that you expect from a bank, and we do those really well. But then what we also know is that one of the largest non-tariff barriers to trade on the continent is access to information. And considering the footprint that we have across the continent and the 20 African countries that we represented, the resources that we have, it's not just an opportunity for us to play a role here, but also a responsibility, really, if you think about it, to bring all of this together, to give policymakers, business people, academics, just a better chance of understanding what's happening on the ground so that they can make an informed decision to really drive growing intra-Africa trade.
With South Africa there taking the top spot in terms of trade attractiveness, does that play on the narrative that South Africa is the gateway to Africa?
I think to a certain extent, yes. But what we should also remember is the way that the barometer is comprised is that it's in relation to the other 9 countries. So it's certainly not saying that South Africa is perfect at trade. It's very well documented, of course, that we have our challenges with regards to trade. We've got border crossing inefficiencies. We've got inefficiencies at our ports. We've got significant infrastructure challenges, etc., etc. And so it's certainly not saying that South Africa is perfect, but it does say, and it's a reflection, I guess, more of the maturity of us as a country and us as an economy in comparison to the likes of a Nigeria or a Tanzania, that in many of the facets that impact trade, South Africa is certainly more mature in comparison.
Well, let's actually talk about the interesting moves that you have seen to the upside, and particularly Tanzania.
Yes, so Tanzania, the improvement on its ranking, significant improvement, is truly a reflection of improvements that we're both seeing at a macroeconomic level, but also coming through strongly in the barometer is businesses' view of how government is supporting it. We're also seeing that the current administration there is doing lots to improve relations from a regional trade perspective, to integrate Tanzania into the broader East Africa community from a trade side of things. And then good work being done on infrastructure, significant investment in rail and also in road infrastructure, which is really important. I've just found it fascinating coming through in the report that in the last 3 years, Tanzania has increased its road network by a third. It was absolutely remarkable. And it's so much needed because we know on the continent that 30 to 40% of the cost of goods is allocated to the infrastructure challenge that we have. So if we improve infrastructure, we have the ability to reduce costs to the consumer ultimately. And road plays a key role. 80% of goods being in transit on the continent is by road. So it's absolutely critical that we get roads right, but then of course also diversify the way in which we move goods via the likes of rail.
Well, another one that stood out, but on the downside, is Ghana that exited the top 3. What were the, pressures or headwinds there?
Yes, Ghana has unfortunately gone through a challenging few years back to back. And really this year it's culminated in a lot of the businesses in Ghana not being, not reflecting that positively about what's happening in the country. We know that Ghana is really challenged from an economic perspective, high inflation rates. They've had significant foreign debt challenges, which fortunately enough, there's more clarity on that now. But then also one of the critical factors that businesses told us about Ghana, in the rest of the countries too, but certainly stood out significantly in Ghana, was access to foreign liquidity. We know that in Africa and in Ghana, it's a significant challenge because you need, in most instances, US dollars to fund your imports. And if you just simply don't have that liquidity in the market, businesses cannot access it and therefore can't fund their imports. And generally that just slows the entire economy down. Of course, Ghana has had other challenges, power being one, unpredictable taxes, unpredictable customs procedures, etc. But certainly not great to see, of course, reducing in the rankings, but we're also seeing some glimmers of hope. There's good infrastructure projects starting to happen. So generally, I think sentiment should be turning fairly soon with regards to Ghana.
All right, well, we do have to wrap up the conversation there. Philip, thank you so much for your insights and really just adding on to the journey of the AfCFTA. That was Philip Myburgh from Standard Bank.